MultiChoice has plunged further into the red. Africa's largest pay TV operator has posted an annual headline loss per share of 715 cents. That's double the prior period and much larger than previously flagged. MultiChoice has cited a weak macroeconomic and consumer environment. It's pointed to increased investment in Showmax along with impact of the sharp depreciation in the Nigerian naira against the US dollar. Spar has had a difficult first half. The supermarket retailer has posted an 11% drop in profit before tax from continuing operations. That's largely due to high finance costs. As a result, headline earnings per share fell 7.6%. IT system issues also took their toll and weighed on the firm's gross margin. Given the challenges, the group's board has decided against declaring a dividend for the period. Looking ahead, Spar says that while trading in the first half was weaker than expected, it is confident that it is taking the necessary steps to position the business for an improved second half. Alongside the results announcement, Spar also updated investors on its planned disposal of its Polish operations. The firm says it has reached a significant milestone in the process and signed key salient terms with a third party. The group has stated that the interested party is committed to continue operating the Spar brand in Poland. Investors welcomed the news and sent the firm's share price almost 12% following the, almost 8% following the announcement. The counter has ended the trading day 11.78% higher. Telkom has dialed up some excitement for the release of its annual results. The telecoms firm says normalized earnings are forecast to treble. That's thanks to continued demand for the group's next generation technologies. Cost optimization initiatives also helped. Telkom will release annual results on the 18th of June. Motors expects annual earnings to decline by as much as 35%. That's as the automotive company feels the pinch of a tough economic environment in South Africa. The group has highlighted uncertainty created by the elections, high interest rates, fuel prices and energy costs as key challenges. It also noted that consumers are experiencing considerable strain on their disposable income. Despite the challenges and the impact on the firm's balance sheet, Motors is hopeful that it will pay a full-year dividend. The group will open its books on the 3rd of September. PPC has forecast a return to profit. That's as the cement manufacturer benefits from a strong performance by its Zimbabwean unit. Headline earnings per share are projected to come in around 27 cents. That's from a loss of 9 cents a year ago. In the current period, PPC Zimbabwe changed its functional currency from the Zimbabwean dollar to the US dollar. That had a positive effect given the elimination of net monetary losses of 131 million rand in the previous period due to hyperinflation accounting. Shifting focus abroad, the European Commission said that it would impose provisional duties on imports of Chinese electric vehicles of up to 38.1%, a move likely to draw stern words and possible retaliation from China. Here's more detail in this package report.
The EU is slapping new import tariffs of up to 38.1% on Chinese electric vehicles. That's over what Brussels sees as excessive subsidies given to makers there. European Commission Vice President Margaritis Schinas.
This value chain benefits from unfair subsidiarization, which is causing a threat of economic injury to EU battery electric vehicles producers. On this basis, the Commission has reached out to the Chinese authorities to discuss these findings and explore possible ways for resolving the issues identified.
Exact levies vary by brand, with Beijing's state-owned firm SAIC hit the hardest at 38.1%. Brussels said it would set tariffs for BYD at 17.4%, while another Chinese giant in Geely hit 20%. Companies that cooperate with the European investigation could face a lower rate. Wednesday's news follows less than a month after Washington quadrupled its duties on Chinese EVs to 100%. The moves come amid alarm among European and US automakers over an influx of cheap cars from the country. BYD saw its European sales triple last year, albeit from a low base. MG, a unit of SAIC, is gaining market share fast. Numerous other brands from the country are preparing to launch cars in Europe. Beijing has rebuked the EU over its probe into EV subsidies. Officials have urged cooperation and lobbied against the imposition of tariffs. On Wednesday, China's Commerce Ministry said it would take all necessary measures to safeguard the legitimate rights of Chinese automakers. It further said the bloc's decision violated global trade rules. Officials have previously called the US tariffs bullying and said they were evidence that some Washington policymakers were losing their minds.
And billionaire entrepreneur Elon Musk moved to dismiss his lawsuit accusing ChatGPT maker OpenAI and its CEO Sam Altman of abandoning the startup's original mission of developing artificial intelligence for the benefit of humanity and not for profit. Here's more detail in this package report.
Billionaire entrepreneur Elon Musk moved to dismiss his lawsuit against ChatGPT maker OpenAI. The suit, originally filed in February, had accused the company and its CEO Sam Altman of abandoning the startup's original mission of developing artificial intelligence for the benefit of humanity and not for profit. Attorneys for Musk asked the California State Court to dismiss the lawsuit without giving a reason for the move. The lawsuit marked a culmination of Musk's long-simmering opposition to OpenAI, a startup he co-founded. The company has since become the face of generative AI through billions of dollars in funding from Microsoft. Then, last July, Musk founded his own artificial intelligence startup, xAI. In the lawsuit, Musk asked a judge to force OpenAI to make its research and technology available to the public and to prevent the startup from using its assets for the financial benefit of Microsoft and others. In a court filing, OpenAI described the lawsuit as a contrived attempt by Musk to advance his own AI interests. OpenAI and an attorney for Musk did not immediately respond to requests for comment. Musk dismissed his case without prejudice, which means he could refile it at another time.